Hi, this is Peter Schiff. It is Wednesday, March 25th, 2009. I haven't blogged on this video blog for a while. I was out in Las Vegas. I was speaking at a conference. I am back in New York today. A lot has happened since I've last blogged. I think the biggest news item that's come out has been this new plan by Geithner to try to reliquefy the credit markets and move all the toxic assets off the balance sheets of the banks onto the balance sheets of these private equity partnerships that are going to be created to theoretically buy up these assets. And initially, when the plan was announced, we had this huge rally on Wall Street. The Dow was up about 500 points. And again, I've been talking about this bear market rally for some time on this blog. The fact that the market is rallying does not mean the bear market is over. Bear markets have rallies. Whether this rally is going to last for a few more days, a few more weeks, a few more months, it could last a year. I don't really know. But I do think it will end, and I think we're going to make new lows in the market. We've had many spectacular rises in the market over the last couple of years, yet we keep making new lows. I also don't think that the fact that the market rallies means that Wall Street necessarily thinks this plan is going to work. The plan can't possibly work. I mean, working theoretically is going to be to restore solvency to our banking institutions. It's not going to do that. I mean, basically what the government wants to do is move these toxic assets from one pocket into another. They're hoping to take them off the books of the banks, but the government thinks that by providing all this liquidity and allowing various private partnerships, investment partnerships, to bid for these assets, that they're going to somehow unlock some hidden value. That it's just simply a lack of liquidity that's giving these. That's the problem. It's not the lack of liquidity. There's lack of liquidity for a reason, and the reason is there's lack of value in these assets. Nobody really wants to buy these assets at a price high enough to maintain solvency in the banks, because the reality is they're not worth that much because the collateral isn't worth what people thought. And the government figures if they can fund these the investment vehicles, they can create a market. Well, maybe they will. It'll probably be a phony market because all the money is coming from the government. The private sector is going to put up, I guess, 6% of the money because 12% is going to be equity, which is going to be 50% private equity, 50% government, and then they're going to lever it up 6 times, and all the borrowed money is going to be guaranteed by the FDIC, which is basically is the government guaranteeing the money. So the private sector is putting up 6%. But my guess is most of the private sector money will belong to Wall Street's clients, not Wall Street itself, because I think they're too smart to put their own money in there. They just want to get their share of the very lucrative fees that will probably come along with the management. So what they'll do is they'll take their clients' money, whether it's pension funds or mutual funds or hedge fund clients, and they'll partner up with the government and buy up these assets. They're probably going to overpay to the extent that they buy any. Otherwise, the banks that hold them probably won't sell unless they're going to get a price that's higher than what they're actually worth. And I think ultimately the people who invest in these are going to lose money, but Wall Street is going to get a lot of fees. But it's not going to solve the problem because all the toxic assets are still there. All the losses are still going to be there. So instead of a bank failing and now the FDIC having to bail out the bank, the loans are going to fail that are on the books of these new partnerships. And the government's going to have to bail out the FDIC that's going to have to make good these loans. This is not a solution. This is an attempt by the government to sweep the problems under the rug, and it can't work. And again, it is interfering with the market's necessary repricing of these assets, and we need to allow banks to fail. We need to allow assets to be repriced, and what we don't want, and what the government is hoping, is by relieving the banks of some of these toxic assets, that the banks will take that new capital and loan it to Americans so they can go right back to their borrowing and spending. But again, that is not going to happen. Those conditions don't exist anymore to support that kind of irresponsible lending. So maybe we'll keep some banks from failing, but we're not going to reflate the bubble, and the recession is still going to get worse, and ultimately these assets are still going to lose value. Now, another important thing I wanted to talk about today is the news out of China, and they're wanting to move away from a reserve system based on the dollar, moving to some other type of reserve. They're talking about special drawing rights from the IMF, which are basically currency issued by the IMF that is backed by a basket of currencies, which includes the dollar, but also includes other currencies like the euro, the Japanese yen, the British pound. But this is not the best alternative. It's probably better than what we've got now, but I don't want to involve the IMF. The reason that the dollar is the reserve currency is because the dollar used to be backed by gold. See, currencies have no intrinsic value, so what gives them value is their backing. And so all currency used to be backed by gold until Bretton Woods, when we convinced the world to back their currencies by dollars because the dollar was backed by gold. But now that the dollar is backed by nothing, when your currency is backed by the dollar, that's the same thing as backing your currency with nothing. And that's the source of the problem. So if China wants to go from a system where we base our money on dollars to a system where we base it on a combination of other currencies that also have no intrinsic value, it doesn't work. What we need to go back to is sound money, a real monetary system where money is at the root of it, where money is gold. And if we have currencies, they're backed by gold. Ultimately, I think that is where we're headed. If in the interim we move away from a system backed by dollars to a system backed by a basket of fiat currencies or other fiat currencies, I still think that that system will fail. But initially, any movement away from a system backed by dollars is going to be highly detrimental to America's phony economy and to our ability to continue to borrow money and live beyond our means. And so to the extent that the world does move in this direction, it's going to make it far more difficult for the government to continue to finance all these misguided stimulus plans and bailouts, which in the long run is going to be very positive for the United States, but in the short run is going to be very painful. And to the extent that the world does move away from the dollar system, instead of finding legitimate buyers around the world or government buyers for our debt, the only buyer is going to be the Federal Reserve. And as we monetize more and more of our debt, we immediately feel the inflationary impact of that monetization. Right now, to the extent that we can get the world to buy all of our debt because the dollar is the reserve currency, we're pushing our problems on the rest of the world, and we're making our creditors suffer the inflation rather than Americans. But to the extent that the world backs out of this system, and we can see that they're moving in that direction when our biggest creditor says that it wants out, then we're going to increasingly have to bear the full weight of what we're doing. And what President Obama is doing right now, and I watched his speech last night, and again, every time he talks, he speaks about the need for sacrifice, the need to stop living beyond our means, but then he wants to continue those policies. One of the things that Barack Obama says is important is that we need to reduce the cost of health care. I absolutely agree. But the only way to do that is to get the government out of health care. Barack Obama wants to make health care more affordable by spending more money on it. That's not going to work. Everything that he's doing is making the problems worse. To say that we have to grow the government and grow the deficit in order to shrink the deficit in the future makes absolutely no sense at all. We need to deal with our problems and deal with them now. And these gimmicks with this Geithner plan and what Obama is trying to do, none of this is dealing with the problem. All of this is making the problems bigger. And if the Chinese aren't going to cooperate, if the rest of our creditors aren't going to cooperate, and they're not going to finance all this nonsense, if it's all going to go on the Federal Reserve, and they're going to print all the money to make all this spending and all these bailouts possible, then we are going to suffer an economic crisis unlike anything we're dealing with today, because we're going to have to deal with the prospects of a hyperinflation where the dollar collapses and the price of everything goes through the roof, and our economy virtually grinds to a halt. Anyway, that's it for today. Thanks, everybody.